As Patrick mentioned, we're going to discuss how to forecast market direction up to 3 days in advance. I'll be revealing my proprietary slingshot strategy that can help identify when the market or an individual asset is vulnerable to a sell-off and also a rebound. So let's go ahead and dive right in. Of course, Patrick did provide you a risk disclosure. I will also do this really briefly. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. Any results that I share on the session today, any past results, hypothetical results, are not indicative of future performance. Anything I share, whether it be based on an actual trade, hypothetical, due to the time-critical nature of trading, brokerage fees, activity of other traders, etc., we don't, again, guarantee anyone will mirror that performance. All right. So let's start out by talking about why the market is so difficult to trade. This might not be something you typically encounter in a trading education event, but let's face it, it's not easy. And there are, of course, a host of factors that make trading and investing a relatively difficult endeavor. I think a lot of it can be boiled down to psychology. And this is an interesting psychological curve as it relates to the markets, and I'll kind of walk you through it. But essentially, when you enter a trader investment, it's safe to assume, right, you have some degree of optimism, enthusiasm, maybe even exuberance and euphoria, right? You expect that trade to work out. But it doesn't, no, unfortunately, always go that way. And that, enthusiasm and exuberance can quickly turn to anxiety, denial, fear, despair if the trade is not going the way that you anticipated. This is where you typically see panic selling, right? Capitulation, people get discouraged. But that only lasts for so long. Eventually, markets reverse, and that can then transition into hope, relief, and optimism, right? And this cycle just kind of repeats itself. But what I'll point out is that typically when there's this exuberance or euphoria, and I'll talk a little bit about FOMO mentality, there may be a high level of risk in the markets, a high level of financial risk. And when you then get panic selling, right? And we've seen this recently, and I'll reference that, but that might actually be the most opportune time to invest. Okay, so let's just dive a little bit deeper into psychology of failure. This is all going to tie into the slingshot. Okay, but anytime we enter a directional trade, our goal is to buy low and sell high, right? But unfortunately, that goes against our human instinct. So instead, when a security goes down, we tend to sell it, and when it's already gone up, we tend to buy it. And then we'll panic when the price is falling because we're afraid of losing money, right? And we buy when it's rising because we're afraid of missing out. So that's the FOMO mentality. Right? And to compound this problem, we're wired to repeatedly make this same mistake. So we'll buy high and sell low because that's generally what our emotions tell us to do. And markets are largely based on emotions, right? Fear and greed, or largely what drives supply and demand. Now, without a solid trading plan, we're vulnerable to our emotions. And in addition to that, if you lack a strategy that can identify momentum shifts, meaning you don't know when to get in or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors, and even experienced traders and investors. But we're going to help you address this and solve it on the session today. So let's turn the tables. And instead of being greedy when there's a high level of financial risk, or fearful when it may actually be the best time to invest, okay, we're gonna flip this around, okay, and use what is commonly referred to as a contrarian approach. And it's the Warren Buffett adage, right? Be fearful when others are greedy. And this is the mentality that has largely led to his tremendous success in the markets. So what I'm going to give you today to make this all easier for you is, number one, you'll discover the slingshot setup that is proven very effective in market sell-offs, okay, and market rebounds. I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. Now, we'll never claim we're going to pick an exact bottom or top, but as you'll see, as I kind of unwrap this slingshot strategy, you can get remarkably close. Now, I'll show you how to apply this setup to any market, any time frame. So this is completely fractal in nature. You can do this on a 1 minute chart. You can do this on a daily, weekly, monthly chart. Okay, it can be applied to any asset class. I'll show you how to mitigate risk and help reduce some of your losing trades. Okay, we'll look at some trade examples and also clear buy and sell signals that are designed to give you up to 3 days of advance notice of a forecasted trend. So imagine if you could buy low and sell high without any guesswork. All too often we use some degree of intuition or guesswork in our trading and investment decisions. So we want to, try to eliminate that as much as possible, right? Because of what we just discussed as it relates to the psychological drawbacks of trading and investing. So keep that psychological curve in your mind as we start to dive a little bit deeper here. So there's actually one volatility study that has made this possible, going back to the dawn of the stock market. And it's a unique setup I call the slingshot that's allowed traders to buy low and sell high with impressive accuracy. So it also warns us of potential market sell-offs. This alone is worth its weight in gold because, again, going back to the psychological fear we all encounter when there's the uncertainty of a major market sell-off. And again, we've just recently experienced this. So again, we're going to use what I call volatility bands. And once these bands can't be stretched any further, they have to bounce back. It's somewhat of an inevitability in markets, right? We wouldn't have directional movement in markets. We wouldn't have trends if this didn't occur. And this rubber band effect makes it possible to accurately identify tops and bottoms in the market. So we're going to look at some charts, and I'm going to pick some of the worst market conditions that we've seen. We could certainly use the recent one, but I'm going to go back to early 2020 during the February-March crash, catalyst, of course, being the COVID pandemic. So this is a daily chart of the S&P 500. And for now, I'm just going to point out kind of what's going on here as it relates to that psychological curve. So in mid to late March, okay, S&Ps are putting in new all-time highs. We've been in this decade-long secular bull market. And of course, we all know what happened, right? We're in the infancy of this pandemic with all of this uncertainty. Global economy shutting down, quarantining, all this stuff. I'll get into that a little bit more. But you can think about the catalyst, the psychological component of this. Now, when markets are, in a very strong, well-defined uptrend, we're in a secular bull market, people are coming in and buying. And if they didn't get in at lower prices, they have the FOMO mentality and they may be buying near market tops even. Now, this is actually where we want to look at potentially selling. Okay, that could be taking profits, hedging long positions, putting on speculative short positions, whatever it may be. But this is, again, where most traders are going to be buying. Now, as we all know, there was a significant sell-off in late March into around the third week of late February and around the third week of March. S&Ps were down over 30%. There was still all this uncertainty around the actual catalyst, right? We didn't have any, viable treatment options, vaccines, etc. Yet, buyers came in, okay, after the S&Ps had, lost roughly or slightly more than 1,200 handles in just a matter of a few weeks. Buyers come in, right? Markets catch a bid. This is where people are panic selling, taking losses, but it creates opportunity. And even in the absence of a resolution of this catalyst, even in the midst of all the remaining uncertainty, markets rebounded right back up into that initial volatility expansion level. I'll elaborate more on what that means. Okay, so this is where we might want to look at selling, when most other traders are now starting to buy back in. So we're going to come back to that chart and apply the slingshot setup. Before that, I'll just give you a quick brief Background on myself. Again, I'm Jeff Tompkins. Great to have all of you here today. I have over 2 decades of experience trading the stock options and futures markets. Received my professional training at Morgan Stanley as an intern at the trade desk back in the early 2000s. And about 10 years ago, founded Altos Trading, where I'm the chief investment strategist. We've rapidly grown to over 60,000 members in over 100 countries across the globe. I'm also a hedge fund manager, so I manage money for my clients at Altos Capital. The slingshot strategy is one of the core methodologies I use in my hedge fund. And also one of the methodologies that I really credit for the success that we've had in the fund since it was launched a little over 5 years ago. We've never had a losing year, traded through some very difficult market conditions like, of course, the COVID crash, the bear market of 2022, et cetera. I'm also the founder and creator of the trade trend signal software, which I'll be talking to you about as well on our session today. So by the end of the session, you're going to discover one trade setup that has produced massive returns going back to the beginning of the stock market. It happens repeatedly with astounding predictability. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets as markets become more volatile, more erratic, less predictable. All right, so you'll discover why volatility is one of the only leading indicators of market direction. I'll show you how to identify when markets may be vulnerable to a sell-off. This alone can completely turn your trading around because it, again, helps reduce that fear component that we all face when we make trading and investment decisions. I'll show you how to identify when the market is likely to go back up, how to determine exactly how far the market is likely to go back up. So we're not going to be using guesswork here. We're going to know the exact level. How to get your hands on a tool that would change your trading forever. That's a bold claim, I realize. It's one I make because it's a tool that's changed my trading forever, and I'll share that with you and why that is. But let's start out by imagining a slingshot. Why do I call this the slingshot strategy? Well, as the slingshot is pulled back, muscle energy is transferred to elastic energy in the bands of the slingshot. After the slingshot is released, the elastic energy is transferred to the stone as energy of motion. So what's referred to in physics as kinetic energy. Well, kinetic energy kind of plays out in a different form in financial markets, in the form of supply and demand. So when we have demand, right, we get buying pressure. Now, once the band becomes overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. Okay, so we're going to apply the slingshot effect to the markets now using volatility. Okay, now there are different types of volatility. There's historical volatility, implied volatility. We're going to specifically kind of focus more on implied volatility, which is a forward-looking predictive indicator, right? So we're going to gauge the volatility using what I again call volatility bands that are going to tell us when prices move too far from the mean or the average and is likely to reverse direction. And so the indicator we'll use here is the Bollinger Bands. Some or many of you may have heard of the Bollinger Bands, maybe even used them. Like most indicators, there are many, many ways to use them. We're going to look at a very unique way. But this is an incredible indicator that's available on virtually any retail trading or charting platform. You can add it to your chart inside NinjaTrader. And again, when used in a specific way, it can help us pinpoint turning points in a security with quite astounding accuracy. So we're going to start to dive a little deeper now into the slingshot. I'll point a few things out on this chart. So you can see the Bollinger Bands are plotted. And if you're not familiar with these, I'll give you a brief high-level overview in just a minute. But I just want to point a few things out quickly before we move on. So what we see here is price rotating lower and breaching the lower band. So I'll describe these as upper and lower bands, right? There's 3 bands, there's a middle band, an upper and a lower. So price is breaching the lower band. We then see that the asset, doesn't matter what this is, a stock, an ETF, a currency pair, it could be anything, starts to rotate lower. It sells off. Okay. So this is the beginning of the slingshot. Now, eventually, that whatever drove the sell-off, maybe it was fear, maybe it was panic selling, doesn't matter, attracted buyers. They came in, bought the asset, and drove the share price right back up to that level where that sell-off ensued. Okay, so we're going to get into some more charts, and I'll walk you through each of these steps. Let's just quickly cover the Bollinger Bands if you're not familiar. So to calculate the Bollinger Bands, we take a simple moving average of the securities price. That's going to be the center band you see there on the chart. Next, we take the standard deviation of the securities price. Now, standard deviation is just a mathematical measure measurement of average variance. Of course, you're not going to have to do any of these calculations. The indicator does it for you. But I just want you to have kind of a baseline understanding of why how these are calculated and why they're significant. Now, the standard deviation measures how spread out numbers are from an average value. And again, we won't go into the calculations. The important thing to know is that because standard deviation is a measure of volatility, when the market becomes more volatile, the bands will widen. And when the market is less volatile, the bands contract. And I'm referring to the upper and lower band or the outer bands. Now, the settings that I use are typically the default settings in most broker and charting platforms. And that is a 20-period SMA or simple moving average and a 2 standard deviation setting for the upper and lower bands, the outer bands. Okay, so it will typically default to this. If not, you can change it. I don't adjust these settings for time frame. I don't adjust them for asset. These are the universal settings that I use. Now let's look at the Bollinger Bands in practice. As I mentioned, like any other indicator, you give it to 10 different people and it will likely be used in 10 different ways. One of the common ways Bollinger Bands are used are to buy at the bottom band, sell at the top band. Now the problem with this approach is price can hug the upper or lower band for extended periods of time. So in a ranging market environment, this might work out well. And then, for instance, you may have a series of small wins that could then be wiped out by, volatility expansion, a range breakout, and a strong directional move. So for that reason, we won't use that approach. Another approach is band contraction and expansion. Now, this is a very valuable kind of approach to using the Bollinger Bands. We're going to incorporate this into the slingshot because it can be a good indicator of an impending big move in a security. But the problem is it doesn't tell us which direction the move will occur. Okay, so we'll incorporate this, but we're not going to use this as a standalone. Now, in others, buy or sell at the middle band. So this is what we call a mean reversion strategy. And this can work well in strong trending markets, but it will typically fail in sideways ranging markets. So we won't be using that approach. Now, the slingshot, as I mentioned, is a unique approach where we wait for the lower band to break. I'll elaborate on what that means. But it's basically where price will hug the lower band and then ultimately rebound to where the breach initially occurred. So this is the essence of the slingshot. And again, we'll walk through some charts and things in finer detail, so this all becomes very clear. All right. So in the interest of time, I'm not going to really go too deep into the Bollinger Bands. We kind of gave a good overview of those. But let's focus on the slingshot aspect. So again, this is where price can exceed or hug a band envelope for prolonged periods during a strong trend. So what we do is we wait for the lower band to break and then wait for a buy signal. And then we exit when price returns to the breaking point. Again, I'll explain this terminology as we review charts. Okay, but the slingshot setup occurs with astounding predictability. And I would urge you and challenge you to actually, apply the Bollinger Bands to your chart, go back as far as you can on the chart, all the way back to the dawn of the stock market, okay? The major market indices have returned to the initial volatility breakout with astounding accuracy. That includes the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the crash following the '08 mortgage crisis when markets lost over half their value that year, the 2000 dot-com bubble, the Corona crash, every black swan event, market correction, major crash, bear market, you name it. This plays out. In fact, we just saw it play out recently in April. Okay, so let's now start to dive into some charts so this all becomes a little bit more clear. I told you we come back to this chart of the S&P 500 index from back in early 2020. Okay, so this is the daily chart. We now have the Bollinger Bands plotted. I'm going to point out some critical things, so get your pen and paper handy. On the left edge of the chart, we notice that the Bollinger Bands are horizontal. That's not quite so important, but they're parallel and narrow. That's important. Okay. Now remember, at that point in time, S&Ps are putting in new all-time highs. We're in the kind of the tail end of this decade-long secular bull market. And think back to the psychology chart. What's going on in the trader's mind, right? FOMO mentality, the trader's dilemma, where maybe you have open profits and long positions and you're not sure whether to book the profits and miss out on a further upside move in the markets, or hold on to the positions and risk watching your profits evaporate or, even turn into a loss, all these things, right? But going back to the slingshot, so we've got narrow, and when I say narrow, I'm referring to the outer bands, the upper lower band, and parallel bands. So that's telling us we're in relatively low volatility market conditions. We're in what I call volatility contraction. Okay. Now, something interesting happens here around the third week of February. Okay. This is the beginning of the slingshot where the bands start to get pulled back. We get a breach of the lower band. Okay. In other words, if you look at the daily candlestick, right, it exceeds that lower band. Now, that's a 2 standard deviation move away from a 20-day average. Now, here's the other critical thing. Simultaneously, the upper and lower band, the outer bands, diverge. Those are the three critical components to qualify as a valid slingshot setup. You have to have prior vol contraction, right? Narrow outer bands, a breach of the lower band. Okay, price exceeds the lower 2 standard deviation band, and a simultaneous divergence of the outer bands. That's where you go into volatility expansion. This is a reliable indicator of a potential market sell-off. There it was, of course. Psychological curve, what's happening? Panic selling. People are taking heavy losses. It creates opportunity to buy at much lower prices. Markets ultimately rebound right back up to that initial volatility expansion level. And interestingly, notice what happens at that price level around 3,200. Notice how once it's reached, we actually get a pretty significant sell-off the next day. Right, gap down, close lower, and then the S&Ps just kind of go into, about a 200-point range for the next several weeks. Okay, all that buying pressure dried up. Okay, so your Warren Buffetts, George Soroses of the world are taking profits, right? So it's not so much that there's an imbalance of supply and demand where there's like heavy selling. It's just most likely profit taking. Okay. Now, as I mentioned, this methodology can be applied to any asset. This is a past chart of Apple. Okay, it's a daily chart. You notice on the left half of the chart, what's going on? Apple's in a strong upturn. It's trailing the upper Bollinger Band, okay, until about the middle of the chart. It rotates lower. And interestingly, that first candle that you notice it perfectly kissed that lower band and then reversed higher. The next day, we get an actual breach of the lower 2 standard deviation band. For any of you out there who are candlestick pattern traders, right? These are 2 bullish reversal candles. And I would venture to guess, I don't know this, but would venture to guess that probably a lot of traders got trapped here on the long side, thinking, okay, we've got 2 bullish reversal candles. Remember that approach we talked about, buying at the lower band, selling at the upper band? Okay, that wouldn't have worked here, right? But if you understand the slingshot, if you're a slingshot trader, right, this would have alerted you to a potential market sell-off. Now, it's not a guarantee it's going to sell off. We need some follow-through. And you see that we got that on the next day. We gapped down, but we had the simultaneous divergence of the outer bands when price breached that lower band. Apple sells off into a key support level down around 168, which generates demand and buyers. Apple catches a bid and returns right back up to the initial volatility expansion level. Once again, notice how the stock just kind of went into consolidation and range there for about a week or so before it went on to continue its upside move. Here's another example on the QQQ. Again, this is from a prior year, actually back in 2018. On the left half of the chart, we're in a range, putting in new highs. We're in low vol conditions. The bands are parallel and relatively narrow until we get a breach of the lower band and the simultaneous divergence of the outer bands. There's the sell-off, which eventually attracts buyers who come in and drive price right back up to the initial volatility expansion level. Does it work on intraday timeframes? Yes. Same principle, same methodology. This is a 5-minute chart of AMD Advanced Micro Devices. You see that the stock is just kind of on the left half of the chart, or left kind of third quarter of the chart, I guess, is ranging between the upper and lower band. Again, that was approach we looked at. That would have worked out a few times, it looks like there, until we get a breach of the lower band, simultaneous divergence of the outer band. In fact, we had a couple slingshots embedded in here. Sell off, buyers come in, price returns back up to the initial volatility expansion level. All right, so we talked about and focus more on the sell-off component. Like, when is the market vulnerable to a sell-off? When is an asset vulnerable to a sell-off, right? Breach of the lower band, simultaneous divergence of the outer bands, and prior vol contraction. You're probably wondering, how do you identify the buy zone? Okay. Well, this is probably arguably the most tricky part of the slingshot. And I've used this approach for many, many years, well over a decade, probably closer to 2 decades. Okay, and I used to do this all kind of manually, and I had to incorporate some degree of guesswork. So there's different approaches, right? But the trick is to identify when the band is overextended and ready to snap back. So I would use things like support levels. So if the asset sells off into a support level, that level seems to be holding, and then price is reversing off. That would work sometimes, but sometimes would result in a false upside move that then continued down and broke through the support level. Maybe using candlestick patterns. Again, these all involve a fair degree of intuition and guesswork. Okay. Another, you can wait for actual confirmation for price to start to, trade well off that lower band. Problem with that is then you can miss a lot of the move. Okay. So I spent well over a decade, thousands of hours trying to determine when momentum is shifting and a new trend is starting. And once I got this formula dialed in, I then had to configure it to work on all time frames, duplicate the success across all markets, and then do so in an adaptable algorithmic formula that can reliably forecast market trends. And the result is a tool that can help provide accurate buy and sell signals near the outer channels of the Bollinger Bands, up to 3 candles in advance of a move. And I'll explain that here momentarily. But it can also be used with any other indicator, any other strategy, any other methodology or approach. Okay, it's a great standalone as well. So the purpose of today's session is to show you how you can use this with the slingshot strategy. Because when you formulate the right combination of momentum indicators, combine them with volatility studies and price action setups, you can actually accurately identify buy and sell signals at the outer bands. And this is what's been built into the trade trend indicator. All right, so trade trend gives us accurate buy and sell signals at the, or I should say buy signals at the bottom of the slingshot. It will also give us sell signals near the top of the slingshot, and it does so with a proprietary blend of momentum indicators that can warn you of market sell-offs. Again, we're going to look at some charts here momentarily. It can help forecast short-term and long-term trends with astounding accuracy. It can be applied to any asset class, stocks, ETFs, futures, Forex. You can scan for trade opportunities on any time frame. You can back test. I love using this indicator for my directional options trades. I do a lot of trading in the options market, which of course, directional options trading being a very time critical endeavor, and help remove guesswork from our trading decisions. All right, now I mentioned I'd give you a little handy little trick to help reduce your frequency of losing trades. And this is just a simple order type that I think is highly underutilized for directional trading, and that is a buy stop or sell stop order. So typically, if you're going to buy a stock, let's say, people will use a market or a limit order, and not that there's anything wrong with that. But if you're taking let's say, a bullish directional trade, what you can do is you can place a buy stop, strategically place a buy stop order at a higher price, and that requires the asset to follow through to get a fill on your order. Okay, or conversely, you can use a sell stop order below the current market price to enter short trades, and this can actually help filter out false signals and improve consistency, because again, you need the follow through, right? The directional follow through, and if that doesn't occur, then you simply don't get in the trade. Whereas if you get in with a market or limit order, you may get into a trade that never follows through and immediately reverses on you. So this is actually all built into the trade trend indicator. The indicator will give you the instructions in order type. So for instance, it'll say use a buy stop order at X price on X asset. Okay, so it gives you the exact order type and price level. And again, any market, any time frame, you can do this with any size account. Okay, that's all up to you, your discretion. and it gives us predictive buy and sell signals before the move occurs, up to 3 candles in advance. So it will give you a pending buy or sell signal. And when I say up to 3 days, if you're applying the indicator to a daily time frame chart, you will have up to 3 days of advance notice with the whether it be a buy or sell signal and the precise suggested entry price that is then valid and good for the next 3 days. Now, if you're doing this on an intraday chart, let's say a 5 minute chart, right? You'll have up to 15 minutes of advance notice. Now, it may only be 5 minutes, but you'll have up to 15 minutes. So you're getting a good degree of notice of the forecasted directional move. Um, and tra- and I'll let you know in a second how you can get this indicator on your NinjaTrader charts. And then I would challenge you put it on your chart, apply it to a chart of the S&P 500 or the Nasdaq, whatever, the Russell. Go back as far as you can. You can go all the way back to the dawn of the stock market if your charting platform allows you to. You'll see every black swan event, bear market, market crash. You'll see a forecasted sell signal. Okay. You'll also see buy signals when the market rebounds. Here's some examples. This is the flash crash of August 2015. And I have the Bollinger Bands plotted here. So now that you guys have some familiarity with the slingshot strategy, you can probably hopefully spot these slingshots. Okay, so this flash crash of August 2015, markets are pretty much sideways. S&P 500 chart. Trade trend flashes a sell signal. Okay, well, there's nothing really going on. We're just in a consolidation range. But the very next day, we get what is that, about a 300 point crash, right? We get a double bottom. Trade turn flashes a buy signal in early October before the markets rebound. And you can see the slingshot in there. Here's the '08 mortgage crisis, May 21st. Okay. Trade turn flashes the sell signal. Literally just a few days before markets lose more than half their value. It also flashed a buy signal in late November before markets recovered and rebounded. 2000.com bubble. So going back over a couple decades, you guys see the slingshot there, right? Breach of the lower band. Trade trend flashed the sell signal there, and there is the .com bubble bursting and the corresponding market sell-off. It also gave us a buy signal later in September of that year before the markets rebounded. So guys, virtually every system, will produce winning trades if you can stick with it long enough, right? And use good risk management and so on and so forth. But the problem is they don't keep you out of the market when conditions are not favorable. And then you end up giving back your profits on the losing trades. That's what we want to try to avoid, right? Our losing trades are our biggest overhead. We'll always have losing trades and we want to minimize that overhead, okay? So I want to make a promise to you guys. I want to help you make more confident trading decisions. And I'm going to give you access to the exact indicator that has generated the signals I've shared with you on our session today. So this is a one-time opportunity to join me to discover how you can receive buy and sell signals on your charts up to 3 days in advance of a forecasted trend. And you can use this with, now that you know the slingshot strategy, with the slingshot, you can use it with other indicators, use it with other strategies. And I'll reveal every one of my special techniques and indicators. I don't hold anything back. I don't give you a redacted version. I don't give you, I'm using the supercharged version of the indicator, and you're just getting the basic. It's the exact one, exact same one. So you're going to get 12 months of trade trend on NinjaTrader for whatever asset class that suits your fancy: stocks, futures, forex, ETFs. You can apply it to anything that produces a chart. You get exact entry and exit signals. You're also going to get live interactive trade sessions on a weekly basis with me. So kind of like we did today in our session with the slingshot strategy, we hold weekly strategy sessions with our members at Altos and cover new, unique, and highly effective strategies on our session. So you got a nice little taste today. You're going to be invited on a weekly basis to our Tuesday evening sessions. Those are recorded, so if you're not able to attend, you'll also get access to the replays and recorded training sessions. You get full support from me on our sessions. Only limitation is I can't give you individual investment or trade advice, but I'm there to educate and give you guys the tools and strategies that are proving effective in current market environments, and help support you as you learn new information and then decide whether or not you want to apply it to your trading arsenal. We also are going to include a full curriculum on trade adjustments if you're an options trader. So we're going to throw in an online curriculum. You can watch this at your leisure, and it can help mitigate risk and even in some cases take losing trades and transition them into net profitable outcomes. You'll get that full curriculum. These are all hand-selected signals straight to your inbox, and ultimately designed to cut the learning curve starting as early as tomorrow when the markets open back up. Now, there's even more in this package, so I'll walk you through it. And then hopefully I'll have a couple minutes left for Q&A. So you're going to get a 12-month subscription to our trade trend signals. We normally retail those for $14.99. You're going to get the weekly live interactive trade sessions, which normally retail for $5.50. You're going to get coaching from me on a weekly basis on our Tuesday evening sessions. My personal coaching typically starts at $19.97 and goes up from there, but is also included in that package. You're going to get exclusive invitation-only Facebook group access to our private Facebook group of around 900 members. You're going to get the option trade adjustment training, which retails for 900, and ultimately learn to trade whatever asset class market that you are interested in trading. And then we're throwing in 2 bonuses. So you're going to get our professional trading series online course. This covers our very best strategies, technical analysis tools, all built into an online curriculum of over 10 hours. You can watch it at your leisure. It doesn't expire, and that normally retails for $5.95. I'm also going to throw in my top 2 weekly trade trend picks. So every Monday, I go to work, run scans, do all the research, and pick out what I think are the 2, best trade trend signals for that week. And then I send them out to all of our members. So you get exact instructions with whether it be a buy or a sell signal, the asset class, the entry prices, profit target levels, stop loss levels. And we also include a supplemental option alert to go along with those. So as you're getting up and running with the indicator, this is a handy way to kind of see what I'm selecting, what I'm looking at, and kind of help bolster your confidence as you're learning the indicator. We normally retail that alert service alone for $9.97. So the total retail value on the package is just over $6,700. We are knocking 92% off this retail price for the entire package. You can literally get everything you see here on your screen for just $4.97. This is limited at the discount, so we limit this to 25 seats at the discount. We literally lose money on this for everything that we're providing here. So we obviously can't, do unlimited numbers at the 92% off. So you can still get any of these things once those 25 seats are scooped up, but it will go back to the retail price. So if you want that 92% discount, all you need to do is go to altostrading.com/slingshot. Lock in one of those 25 seats at that 92% discount. We'll get you all up and running, set up with the trade trend indicator on NinjaTrader. We should have everybody set up by tomorrow. You'll of course need to submit your machine ID, and then we'll get that activated for you. And then you'll get members area access to access the bonuses, right? Your professional trading series online course. You'll find the weekly trade alerts. Which, by the way, I don't think I mentioned, will go out by email as well. But you'll find everything in your members area, okay? Again, you get both bonuses, the professional trading series, and you get my top 2 weekly trade trend picks. Here's what they look like. It's just an example. In the interest of time, I won't go through all of our testimonials. We do get many, many testimonials from our trade trend users. And then I have a guarantee. So if you don't make at least your membership fee back in the first 90 days of being a member, we will comp you an extra year of trade trend on the house. Again, that's a $1,499 retail value. We want to give you ample time to, and we certainly encourage you to paper trade, practice as much as possible, get comfortable before ever risking any of your hard-earned money. Even if you just paper trade for the first 90 days, that's fine. Then you didn't make your membership fee back. Shoot us an email. We'll comp you an extra year. Here's our contact info, support@altostrading.com. We also have a toll-free number, 800-895-9348. Again, that link is altostrading.com/slingshot. and I will go ahead and take any questions. So if you guys have questions, as Patrick mentioned, you can just pull up the chat. Um, and I will do my best to answer those. Tom asks, is there any kind of proof of personal success with this that you can show? Yeah, so unfortunately, there are certain compliance requirements with broker dealers where there are limitations on being able to show personal trades. So unfortunately, I'm not able to do that, but I can tell you, yes, I've been very, very successful with the trade trend indicator. I've done very well with it. I use it on a daily basis. Uh, you're welcome to reach out to us uh, through phone or email, and uh, if I could possibly share some results with you, I've got to fully disclose and give you all the details of a trade. But yeah, I've been very, very successful with it, Tom. So yeah, thanks for that question. I'll put the package back up for you again here, just so you can see it. Let's see. Oh, question on the discount. Yeah, so the 92% discount is grandfathered. So, number one, we don't have any contracts or commitments. We don't lock you into anything. It's totally up to you if you want to continue past your first year. Most of our Trade Trend members do. But again, we don't lock you in. If you do continue, you are guaranteed that 92% discount. You're grandfathered in. We never raise the price on you. Yeah, absolutely. Let's see. Yeah, so you're gonna find all of everything you see here in the package in your members area, and then you'll once you lock in your seat, you'll be taken to a form to provide your NinjaTrader ID. That will get transmitted to us, and then we'll go ahead and activate the indicator for you. And from there, you'll be able to immediately pull it up on your charts and see all the buy and sell signals on the chart. I don't think I mentioned the indicator also comes with a trailing stop component of the algorithm. So it also gauges momentum and trend strength and volatility and prints a horizontal little dash, a trailing stop on your chart to help you manage positions as well. Jan, unfortunately, there was a little technical issue on the platform side, and I was hoping to be able to show some charts, but not able to do that. Once that's resolved, if you want to, again, here's our contact info. Reach out. We're happy to be happy to pull up some charts for you if you want to look at anything. Yeah, Tom asked the buy and sell signals are the arrows, correct? Exactly. So the arrows that I was showing you, that's the forecast. So that's what you're going to get up to 3 candles in advance. That's not where the indicator is not telling you to buy or sell there. That's when you're going to get the suggested entry price. So if you get a green up arrow, you're going to see, use a buy stop order at X price. So that's where if you want to trade a signal, you would go enter that order in the NinjaTrader platform, and then there will be a symbol on your chart as well. If the asset reaches that price level, that would be a confirmed entry. If it doesn't reach that level in the next 3 candles, again, that could be 3 days on a daily chart or 15 minutes on a 5-minute chart, the signal is then null, void. It does stay on the chart, so the indicator doesn't repaint. Okay, once the asset has completed printing that, whatever the selected time frame is, that signal is set in stone. So you'll still see signals that didn't actually reach the suggested entry price in the next 3 candles. Many of those still are great signals, and they go on to make good directional moves, but it may not happen in the first 3 candles. That's up to your discretion. You can still obviously place trades on those, but that's how the indicator works. All right. Well, I am right at time here, so I just want to thank everybody for being here. I hope you got a lot out of the session. I want to welcome all of our new Trade Trend members. Again, we'll go to work and get you all set up inside NinjaTrader. Again, that link is altostrading.com/slingshot. I want to thank Patrick and everybody over at NinjaTrader for making these educational events possible and for having me here. I hope to be able to come back again soon. Hope to see all of you again soon.